Friday, November 30th, 2019, MONERO 64, home of alternative economics and contrarian views. Before I start this morning, I'd like to say that I have a 20% off promotion in the MONERO 64 Teespring store. You can find all kinds of merchandise there, mugs, t-shirts, stickers, everything to do with ending the Fed, closing down the Bank of England's doors, right? The old lady of Threadneedle Street, Billy mugs, Billy t-shirts. Yeah, use the promo code MONERO64 and you get a 20% discount. That will go until Monday next week. So this morning I want to talk about whether a run on the Bank of England's gold vaults would lead to a melt up in the COMEX gold. And why would that happen, right? So before I go into that, just look into a headline that came out yesterday. One of my viewers tweeted it, and because I hadn't seen it. That's why it's good to check out Twitter. You get a lot of stuff there that is interesting. So this is the headline, and it came out in a story on Bloomberg. And I want to also bring up Bloomberg, not Michael Bloomberg, but Bloomberg, the company, because they kind of cover up for the central banks and the BIS in this story, or maybe they haven't really done their research properly, and I'll tell you why, right? So, but let's look at the story. It's by Radoslav Tomek. November 28th, 2019, from yesterday. UK can't be trusted with gold. Top Slovak party leader says. Slovakia's former premier said Parliament should force the central bank to bring back the nation's gold stored in the UK, as history has shown that the allies can hardly be trusted, right? Ex-Premier Robert Fico, who chairs the biggest party in Slovakia, said Thursday his formation is seeking to hold a special parliamentary session on the issue. The gold isn't safe in the UK because of Brexit and a possible global economic crisis, he says. I would say also because you can't trust the bankers, but anyway, let's see what he says. You can hardly trust even the closest allies after the Munich Agreement, he told reporters, referring to a 1938 pact by France, the UK, Italy, and Germany, which allowed Adolf Hitler to annex a part of Czechoslovakia. I guarantee that if something happens, we won't see a single gram of this gold. Let's do it as quickly as possible. Well, back then, yes, there was the Munich Agreement. Yes, it led to Czechoslovakia being invaded, but the reason why they lost a lot of their gold, not all of their gold, was because of this bank here, the Bank for International Settlements, and the Bank of England. There's even a chapter here dedicated to this, chapter 5, entitled "An Authorized Plunder," right? Here we go, authorized plunder. And I'll read a little bit from it. I won't go through the whole thing. It starts with a comment from George Strauss, Labour MP, speaking in the House of Commons, May 1939. The Bank for International Settlements is the bank which sanctions the most notorious outrage of this generation, the rape of Czechoslovakia, right? So, yes, the Munich Agreement might have encouraged Germany to invade Czechoslovakia, but it was the BIS with the Bank of England, actually, and Montague Norman, who was governor of the Bank of England for about 20 years, I think, up until the end of the war, Second World War. That allowed the German government, the Nazi government, to take Czechoslovak gold from the account of the BIS, and also BIS gold that was for Czechoslovakia, from the account with the Bank of England. This is on page 60. Thanks to diligent detective work by Pete Clements, the BIS archivist, we have a clear picture of what happened next. The first order instructed the BIS to transfer 23.1 metric tons of Czechoslovak gold held at the BIS account at the Bank of England to the Reichsbank BIS account, also held at the Bank of England. The second order instructed the Bank of England to transfer almost 27 metric tons of gold held in the National Bank of Czechoslovakia's own account to the BIS gold account at the Bank of England. So what happened there, the Bank of England said, oh, we're just transferring to the BIS this 27 tons. But what happened is the BIS took that and transferred it to the German account, right? Not the Czechoslovak account. It's a shame that Bloomberg and this reporter didn't do their homework a little more and actually explain why the gold was taken, right? That it was the Bank for International Settlements, which is the regulator for the too big to fail banks now, right? These are the kind of people that are in charge now, and the Bank of England. This continues, this article, I'll finish it off. 3 months before general elections take place in Slovakia, Fico is riding on a wave of nationalist sentiment that has gripped many countries in the European Union's east, including neighboring Poland and Hungary. Yeah, Poland has just taken 100 metric tons out of the Bank of England. Central Bank spokesman Peter Major declined to comment on Fico's comments. Slovakia, who uses the euro, has 37 metric tons of gold worth $1.4 billion, and it's actively trading it, he said. Well, so why is it okay for the U.S. to keep its supposed gold hoard at Fort Knox, West Point, and other places? Why don't they keep it in London? Why don't they keep some in Berlin or Frankfurt, right? But when other countries want to keep their gold safe at home, they're called nationalists, populists, right? So what's this trading about? Why would Slovakia, of course, those two countries broke up after the fall of the Berlin Wall in the early 90s. It used to be Czechoslovakia. Now there's the Czech Republic and Slovakia, right? We're talking about Slovakia. They don't trade it. What they do, and I'll show you here, the Bank of England. You would think that the gold that they hold, and they hold just under 5,000 metric tons. Out of those almost 5,000 metric tons, only 300 tons belong to the UK. So all the rest is held for other countries like Slovakia, like Australia, which I've talked about before. And what the Bank of England does is they allow the LBMA, through the LBMA, they use the LBMA as a cover, right? They don't do it directly, so it doesn't look fishy, right? They allow through the LBMA, they lease this gold to the big bullion banks. What did the bullion banks do? Well, they short this gold in the market. They leverage it as well. Here in London, everything is done with leverage, rehypothecation, and that's what keeps the paper market. That's what controls the physical price of gold, because this is the paper market where they manipulate the markets, and that's part of the futures game as well on COMEX. So that's why I was saying, if there's a run on the Bank of England gold, and I would argue the New York Fed probably does the same as well. The New York Fed does hold gold for other countries as well. I haven't looked at the New York Fed data, how much gold they keep for foreign countries. I'm just doing here the Bank of England. So are we close to seeing a run on the Bank of England? Not quite. And I'll go through the detailed data from the Bank of England. But this is something that's been happening for quite a few years. There's a story here as well from 2 years ago, 2.5 years ago. Germany gets its gold back from the Fed, and it's a big deal, right? In the story, it says Germany had previously repatriated 940 tons of its gold from the Bank of England without delays. I think with the Fed, it took quite a while. They requested 300 tons, and I think it took quite a few years, like 5 years. Because why? Well, because if all these countries keep withdrawing gold from the Bank of England and the Fed, they can't keep manipulating gold because they use other people's gold, right, not theirs, to keep the price of their currencies overvalued versus real money. And what are their currencies? Well, the Federal Reserve note, the Bank of England notes, right? And it says here in this article from 2.5 years ago, Frankfurt now holds just over half of Germany's 3,378 tons of gold reserves, with 36% left in New York and 12.8% in London. And their excuse is the gold was initially stored outside of Germany during the Cold War, implying that it was for safety. But the Cold War is finished like 20 years ago. No, it's stored there to manipulate the gold market. And the Bank of England and the Fed and the BIS as well are at the heart of this manipulation, right? So before I look at the markets, let's look at how the reserves, and this is not Bank of England gold. This is gold that the Bank of England holds for other countries. And don't forget, the UK has less than 1% of the gold that's held there, right? The latest data they have, as you can see here, 31st of July 2019, that's 159,807,000 troy ounces, which translates to just under 5,000 tons. It's 4,970. All you need to do is take that amount and divide it by 32.15. There's 32.15 ounces in 1 kilo. You would get 4,970,000 kilos if you divide that by 32. Then you divide that by 1,000 because of tons, so it's 4,970 metric tons. It'll be interesting to see because it seems like they only provide data with a few months delay. So we don't know where it is right now, but back in the end of July, it was at 4,970 metric tons, or 159,807 troy ounces. But you can see they started the year 2019 at 162, so it's going down. Looking back, this is until 2011. They did hold about 200 million troy ounces in January 2013. So it has gone down quite a bit from 200 million to now 159 million troy ounces. So it's not there yet, but it's encouraging that other countries seem to be learning about this. I can guarantee you that 15, 20 years ago, there's no talk of gold being brought back from Bank of England or Fed. This is encouraging. This is encouraging because it will eventually, hopefully, more and more leaders in other countries will realize that the best place to have your gold is at home, not with the Bank of England or the Fed. Bank of England that has, in the past, allowed countries like Third Reich Germany to take gold from a country they invaded, right? So let's look at the markets now. It will be quiet today, of course. It's the day after Thanksgiving, even though the markets have reopened. It is 8:08 a.m. London. Spot gold still pretty much stuck in the range, 1457.50. It's up just $1. Range has been 1455 to 1460 overnight. Silver's up 2 cents, 1693. High's been $17 and the low 1689. While the stock market has continued to drop, I mean, it dropped yesterday and we're still, that was in the back of the signature of the Hong Kong bill by Donald Trump. So the stock market closed on Wednesday, the Dow at 28,164. Right now we're at 28,064. So the Dow is down 100 points. S&P closed at 31.53, and we're now at 31.43. So we're down 10 points. The NASDAQ 100 is down about 30 points as well. The currencies are fairly quiet. Sterling unchanged, 129.12. Euro, 110.10, pretty much where it was yesterday when I did the video. Dollars unchanged against the yen, 109.52, and also against the Chinese yuan. So fairly quiet here, the currencies. 703 the yuan, by the way. WTI crude, 58.11, down slightly. Brent, 63.16, unchanged. The 10-year yield hasn't really moved that much. Yesterday it didn't trade. Treasuries don't trade on a public holiday. Right now it's at 177, so pretty much where it was on Wednesday. So not much movement in the bond markets. If you enjoyed this video, make sure you hit the like button. Make sure you share it far and wide. Subscribe to the channel if you haven't yet. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.